Now, a warning from the VIX index. Michelle McCory is in New York with a closer look at that. Michelle, we've been looking very closely for this warning signal. Seems it's arrived at last.
Absolutely, Paul. The VIX index, a.k.a. the fear gauge, or more officially known as the Chicago Board Options Exchange Volatility Index, and it is flashing a warning for investors. Citigroup analysts say options on stocks and currencies show strong warning signals that the recent rally for both may be poised to end. Now, the VIX tracks the cost of using options as insurance against declines in the S&P 500 index, and it has been rising even as equities trade near 7-month highs. Now, currency options show traders are betting on wider exchange rate swings, and that's a sign investors may shift away from higher-yielding assets that benefited from signs of an economic recovery. Now, Citigroup Chief Technical Analyst Tom Fitzpatrick says there is a disconnect between what's happening on implied volatility and underlying price action across a host of markets. Now, the recent drop in the VIX reflected the fact that investors were paying less for options to protect against a decline in the S&P. It hit the lowest level since the Lehman Brothers bankruptcy on May 19th. It peaked above 89 last October. That's a few weeks after the Lehman bankruptcy. But it is now creeping back up, closing at 30.18 on Thursday. So what does this all mean? Well, Citigroup strategist Shyam Devani says it suggests a real danger that a good consolidation or correction to a lot of recent trends may be near. Now, Devani and the Citigroup team believe that the VIX may retest that 34.50 level from a month ago, and that would suggest the danger of a pullback for the S&P 500. So, Paul, they're saying this is a bear market rally, and it could end soon. Paul?
And if our earlier guest is correct, you could see some big fluctuations. He was talking about commodities. He said you could see 20% downside or even upside in commodities. I presume the same is likely to apply to stocks as well.